Cardano has been on fire recently, really heavily pushing up past some of those resistances that we were talking about previously, specifically around 46.5 cents. In today's video, we're going to be jumping down into the world of Cardano's ADA, reviewing, in my opinion, what I think is going on and where I think things are heading next for Cardano. So as I kind of get into today's video, if you do find it useful, informative, smash that like button. If you do find it entertaining as I fall over in the mud, as I travel through the woods here, then also smash that like button, I appreciate that. If you are new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will not miss another video update. So welcome back to another walk and talk, welcome back to another vlog style video where essentially I'm getting away from the desk, grabbing the camera, taking you on a bit of a walk through the woods, discussing what's going on in the crypto space. And boy oh boy, have we seen a bit of a move on Cardano's ADA. And there's a lot of kind of speculation as to kind of where it's going and what it means for ADA, for the kind of the macro picture and all that kind of stuff. So I wanted to put a video together today to talk about what I think is going on when it comes to Cardano, what numbers we're kind of watching out for, and all that kind of good stuff. So let's get into this. Cardano's ADA has recently broken up higher than its previous swing high. I think that was 46.16, but I'll bring it up on the screen here so you guys can see the exact number in which I'm actually talking about. And we broke up above that. And this basically brings in the speculation that maybe the bottom is in for Cardano's ADA. And whereas we would love to kind of say with 100% conviction that yes, the bottom is in for ADA, we can't do that. What it does do though is it does allow us to kind of look at the price action of ADA and say the probability of ADA's bottom being in has increased than where it was before, right? Because essentially that is the game that we're playing here, which is the probability of up or the probability of down at a macro scale, right? And so before breaking 46 point, whatever that number was, we were essentially quite convicted that we were going to see new bear market low points for ADA. Okay, the probability of new bear market lows for ADA has decreased a little, but it is still technically a possibility that we need to kind of factor in to our kind of analysis and our kind of personal thoughts, opinions, and how we act in the space, right? Because one of the things that happens a lot is a lot of people generally just wait too long, right? They wait for numbers that may or may not come, bottoms that may or come or may not come, and this is all because they want to maximize their potential. They want to maximize the amount of money that they can invest and get the maximum amount of tokens and coins in relation to that amount of money, right? And so by waiting and waiting and waiting, they believe that new lows are coming, will buy the exact point in its low point or very, very close to it, and they will maximize their exposure to the asset. In reality, this is a very, very difficult thing to do. Very few people will ever actually buy the bottom or get close to the bottom. Instead, what you tend to find is that a dollar cost averaging strategy is significantly better positioned than trying to wait for bear market lows to kind of materialize. That being said, I'm still pretty confident that the price action of ADA is going to be pushing down and we are going to see some better prices. The probability of new bear market lows is decreased a little bit, but it is still technically there. Now, what changes that into a significantly higher position or a better conviction that the bottom is already in? Well, I would want to see ADA reach past 55 cents. Now, 55 cents on the fib scale, considering its structural moves, would signal to me that there's a very low probability of a move into a new bear market low. But until we kind of reach 55, and at least at the point of recording this video, we haven't, then the probability is actually still quite a substantial one that a bear market low appears. Now, what are those structures? Well, if you kind of follow Elliott wave theory, it's going to tell you that that structure in itself is going to basically be an irregular flat correction, which basically is a very irregular pattern in itself. You have an A wave, a B wave, which is where we are right now, which goes up higher than that of the origin of the A wave, and then you go down into a C wave that drops down lower than the A wave. I'll put that on the screen here for you guys to see. Okay, and so until you can invalidate that pattern, there's always going to be that thought that there's a new bear market low point. That in itself, though, doesn't necessarily mean that you can't dollar cost average and that you shouldn't be taking advantage of these dips as they appear, right? And this is something that we're quite an advocate for on this channel, right? Although I kind of say on the camera here and in the Discord server and on the various different YouTube videos that I think new lows are coming through a subsection of altcoins, Cardano potentially being one of them. At least it was up until today, the high probability of going down into new bear market lows. It's always important to, dollar cost average and actually slowly build your positions in these altcoins. This isn't anything new. This is something that we talk about all the time, something that we've been talking about for years on this channel, in fact. Dollar cost averaging is a great strategy. There's also another strategy that I've spoke about back in 2022, which was to buy the first retracement once you get confirmation that the bottom is in. This means that you get close to the bottom without dollar cost averaging. Again, it's tricky, it's not for everyone, and it relies on you monitoring those charts quite extensively. Essentially what I'm saying here is you have a bottom that comes in, we get confirmation that the bottom is in, and then when you have a retracement from that initial surge, that's the one that you buy. This gives you a couple of key things. It gives you confidence that you can put your stop loss below the previous swing low, and you can go long on the market quite heavily, right? Making sure that you've got good, capital exposure to the asset that you want. It also means that you don't have to worry about all the little dips and everything else that's going on and slowly dollar cost averaging over time. You can just kind of keep an eye on the charts and buy when you feel the time is right. And so there's two great strategies. Personally, back in 2022, I was looking at that latter strategy of basically just waiting for the confirmation of the bottom and then buying the retracement. That's the opportunity I've been talking about for the last couple of months here on the channel, where I'm expecting a big dip in the market. Cardano is the same. It's right in there with that as well. Now, my brother Chris and many of the other team members will just advocate for dollar cost averaging in the market. Dollar cost averaging basically just removes any of that stress. Every week or every month, you allocate a certain amount of capital to the cryptocurrencies that you're interested in, and you forget about it. You kind of put it on a hardware wallet, cold storage, and you're done. You just wait until you feel you want a dollar cost average out of the market. And it's a great strategy. So for Cardano, I think dollar cost averaging is great for the masses, and if you have all the time in the world to look at the charts like myself, then you could just wait for the bottom and buy the retracement, which is where we find ourselves on the cusp of now for Cardano. Because if the bottom is in and we get confirmation that the bottom is in, then the retracement is the thing that we're looking to buy. It is the last opportunity to get that dip in, buy that up and move on. Now, some of you out there and some of you in the comment sections might be thinking, what if the bottom is in and we don't have a retracement? I think that's a very foolish statement to make. Personally, I think that it is inevitable that there's going to be a pullback in the market. We can see this within the data. We can see, if we just take a look at the stochastics up on the chart right now, that they're overbought on the monthly, weekly, daily, 8-hour, 4-hour, right? And you can see that we are looking for a significant pull to the downside on Cardano. And bear market low points on reflection of irregular corrections, Fibonacci retracements, trend lines, and overbought stochastic RSIs and overbought RSIs are an indication that it's going to be a pretty deep retracement as well. It's not going to be something that is going to be over very, very quickly, something that I think is going to actually hurt a lot of retail investors who FOMO-ing at the top. Ultimately, we can't time the market, as there are methods to this, but it's not something I can do. And I'll pull my hat off to anyone who can time the market with that kind of accuracy, but it isn't something that I'm able to do. It's not something that Elliott wave theory can do. Ultimately, we are just here kind of tracking the movements in the market and giving you the probabilities of the structures as they appear. Elliott wave theory tracks the behavior of investors. If people's behaviors change, Elliott wave theory will change. Ultimately, Elliott wave theory in itself is absolute. It will have a structure for every scenario. So if you were to backtest it on a highly liquid market, it will be 100% perfect, because that's what it's designed to do, track the behaviors of those candlesticks and those movements of investors at those particular moments in time. Trying to use Elliott wave theory to predict the future can be a little bit difficult, and it can be a little bit troublesome when you are, subject to having a little bit of bias, having the ability or inability to necessarily draw the structures correctly, and not maybe being fully aware of all of the different possibilities that could unfold. Elliott wave theory, to actually kind of predict the future, is a very, very difficult thing to do. Very few people get it right. I have an accuracy rate of around 70%, so does JB. But yeah, from time to time, things change and things do evolve, and you miss certain opportunities. There isn't a methodology out there that is 100% accurate. Okay, it's very, very difficult to be 100% or even get close to 90% accuracy when it comes to trading, no matter what it is that you are trading. Ultimately, I prefer Elliott wave theory because it tracks the sentiment, it tracks the behavior of investors, but it only works when there is a highly liquid market and when there is a significant amount of demand, which, if we track the current movements of the market, that's a very, very difficult thing to kind of see right now. Ultimately, I spoke about the supply-demand elements in the previous couple of Bitcoin videos, so do check that out if you're of interest to that, but I do see some pretty interesting things going on with the price action. Now, I think Cardano is very well positioned to perform insanely well in that next bullish market. What we're seeing right now is just a small taster of what is to come. I think Cardano is going to perform very, very well, and I think it's going to be one of the best performing assets in that next bullish market. Let me know what your thoughts are in the comments down below, but I'm going to wrap this video up right there with the last kind of wrap-up statement of saying that dollar cost averaging is a good strategy. If you haven't implemented such a thing, maybe you want to consider that. Maybe if you have access to a financial advisor, you should kind of talk to them and see what they have to say. I'm obviously not a financial advisor. I cannot offer financial advice, and all I can do is share my thoughts and opinions on the data and the charts as I personally see it. If you have found this useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and I'll catch you all in the next one.